if we make a smooth transition from the previous video where we were talking about the formation of the supply and demand patterns and clusters, in this video I want to talk about the confirmation of from a different time frame. So let's say these clusters, as you've seen in the previous video, imagine they were on the a daily time frame. So what I will be looking for next would be let's say if in case in the example of the first cluster here on the upper left corner, I'll be looking for the price to, if first of all we have the first two conditions, uptrend, then a cluster. Next thing will be looking for the price to actually go somewhere here and form any of those patterns here. So it's either gonna be an inside bar, a bearish engulfing, or an inverted pin bar. And as you can see in this figure to the right, I'll be looking for a second high, which is actually the bull trap, because most of the traders would be stopped out at this time based on the presumption that there will be a breakout here, and lots of traders trading supply and demand zone will be considering entering into a short trade. Then this would coincide with an area with a lot of stops being hit as well, and this will only magnify the move to the downside. So this is possibly the best pattern for me to trade when I'm looking at supply and demand zones. And the same would be with the chart here on the bottom. So let's say we have a downtrend, then a cluster forming, and I'll be looking for the price to drop below this lower red line here where the X is, and I'll be looking for any of those three candlestick formations. Again, pin bar, bullish engulfing on or an inside bar, and so that will look like something similar to this sketch here. So apparently trading is not a science, it's an art, and as you can see from my drawing, it's not very precise, but it's just for illustrative purposes only. So I'll be looking for a second low lower than the first low, and then a confirmation from price action, as you can see, any one of those candlestick patterns, and then and only then I'll be going to the 4-hour chart, where I would ideally like to see any one of those candlestick patterns as well that confirms what happened on the daily chart, and then and only then take a trade. There will be lots of traders that will be using supply and demand zones to potentially, let's say, price goes above the this red line here, hits the this area where the X is, and then they wouldn't be even waiting for a price action confirmation in the form of any one of those candlestick formations. So what they'll be looking for is just price going above this level and start shorting. While this can give you an extremely great risk to reward ratios, you won't be sure if this is not a breakout or a reversal, so you might actually end up taking a trade when the price is breaking out from this level. So it's crucial that you are actually sticking to those candlestick formations, and also waiting for a confirmation from the 4-hour chart. There are traders that are actually looking on the hourly and 5-minute time frames for double and triple confirmations, but this will be like highly experienced traders, and if you're just starting to use supply and demand zones, I wouldn't recommend you going there, because it will just further complicate the picture. But if you stick to those clear rules, then you will be just fine.